Hey, internet friends. Today I want to answer the question that I asked myself when I first started getting involved in buying stocks or investing of any sort. This NFT craze that's going on right now. Obviously, there's a video that I put out a couple weeks ago on how to make your own NFT, and that's great. I want to empower people to be able to make those decisions. In this case, to sell their artwork in a digital means to a group of people in a way that we haven't been able to do before. Super, super cool. But now flipping the script a little bit, have you ever asked yourself the question, should you be buying NFTs? I don't know. But really that question is not specifically applicable to just NFTs. Now we're talking about any sort of investment at all. So if you're interested to learn how the stock market works, if you're interested to know about commodities or bonds or equities or heavy metals, whatever, not just heavy metal, but precious metals. Those are the kinds of things that you need to know why you want to invest, and you need to have a plan going in if you hope to be successful. If you don't have a plan, you're going to learn that you need a plan, and you're probably going to be stressed and probably losing quite a bit of money as you don't have a plan. Now, it's unfortunate that a plan does not guarantee that you make money. And so, there you go. It's all risky stuff. And so you have to approach it with that knowledge going in. But I wanted to give you 3 things that I have learned over the last maybe 4 or so years as I've been casually investing, trying to learn the market, trying to learn what a cryptocurrency is and what is a stock and what is a bond. And do I want to buy gold? I don't know. I needed to come up with answers. And so my hope is that these questions or these kind of topics will prompt you as you begin to consider, what should I be investing in? So the first thing for me is due diligence. You need to do your due diligence. You need to understand how things work in the industry that you're looking at. And so let's say, for example, let's say you want to invest in Facebook and you think, man, I think that Facebook is going to continue to do good things. Okay, well, do your due diligence. How do they make money? How much money do they make? What does the future look like? What are some concerns? At one point, Libra was going to come out of Facebook, a cryptocurrency, and people were freaking out about it. And then the government got mad. Oh, okay. Well, that changed course real quick. And so you have to recognize that some of these organizations face challenges because of their scale and because of the things that they're trying to do. Now, you may love that. And as you do the due diligence, you may feel like there is a very clear case as to why this company should continue to be successful. That's fantastic. And that moves into our second point. But you have to do the due diligence, because if you just pull up a stock ticker and then throw money at it, you have no idea what you're getting into. You have no idea what the company is about. You have no idea the fundamentals. You have no idea their reputation. You don't know any of those things. And that's very problematic, because stress is what happens when your investments don't go well. And what I have found is the more uncertainty I have in anything that I invest in, the more stressed I am. So I use Robinhood for a lot of the kind of smaller trades that I do. And so I love it because it's a very cheap way to get in. So I know it's been drama lately and everybody's freaking out about it. That's fine. I'm actually going to put my little referral code in the comments. So if you want to sign up, you sign up and we each get a free stock if you use that code. So affiliate link, whatever. But I like the fact that I can begin dipping my toe into this stuff using something like Robinhood. Well, in the process of a friend of mine signed up, and so I got a free stock. I don't know anything about the stock. And in the time that I've owned it, it was around $6 when I kind of got the stock. It's gone from $6 to $7.50 back down to $5. I'm gonna be honest with you, I have no idea why. Why is that? Because I haven't done my due diligence. I haven't studied this at all. It was obviously a free stock, so it was given to me. So there wasn't a level of complexity around the research of should I land this stock. But I don't know what to think about it going up and down. I have a vacuum of information around it. And so if you're going to be throwing money at a stock, it's going to be really stressful if you don't at least have some concept of what type of business they do and whether or not you think there's a degree of potential for success and growth over time. So that leads us to the second one. You got to believe. You got to believe in what you're investing in. The example that I use here, it's Dogecoin. It sounds silly. It's a meme. I get it. It's a joke cryptocurrency. That's what it was created to be. But there was all this buzz. We're going to take Doge to $1. And I'm like, well, let's ride the train. This is fun. So I threw in $50 and I thought this will be fun to see what happens. I cannot tell you how stressed I was For the next 48 hours, I was beside myself. I was talking to my wife about it the other day, and she's like, yeah, you were really stressed about that. Like, it was $50. Like, it wasn't that big of a deal. And yet it really, really bothered you. Well, here's why. Because I don't believe in Dogecoin. I just don't believe in it. It's fun and it's silly, and I like laughing at all the memes on Twitter. But man, I have no understanding of the fundamentals. Well, that's not exactly true. I do have understanding of the fundamentals, and that's why I have an issue. There's an infinite supply. Like, it's never going to stop. There's no cap. Like, there's no like reason for it or purpose behind it. There's no practical application. Like, there's none of these things. And so the only reason it'll be going up is because some random group of people decide to pump it, or Elon Musk tweets about it and everybody loses their mind. Like, that's it. And so because I've done my due diligence and then concluded I don't believe in this, that causes me to need to step out of that. And so I actually sold it, and I put my money into something different. And I feel way better about it because I've done my due diligence about it, and I have belief in it. I believe that it will be a good investment over time. The same goes for GameStop, man. I love GameStop. I've been going to GameStop for probably 25 or so years now. I used to buy used Super Nintendo games at GameStop. All right. So that's my kind of connection to GameStop. I just don't believe in their model currently. I love them, and I'd love to be a part of like reviving them, but I just don't believe in the model that they currently have. They need to adapt. If they start selling hardware, computer hardware, computer chairs, I think even like ergonomical desks, I think that they need to get like LED strips, like hue lights, like they need to start broadening out around the gaming space. So less about just the actual cartridge of the game that goes in your system or the disc. And now we need to move into something different. Start selling gaming monitors, start selling gaming mice, like really invest in that side of things. And I think you have a viable product, along with all the trinkets and the Funko Pops and all those kind, Monopoly that's Mario themed, all that stuff's great. But there needs to be a little bit more there in terms of movement away from the games themselves. That's my belief. So when everybody started freaking out about GameStop, I had an overt conversation with my wife about it. And I said, I'm not going to put money in GameStop because I do not have belief in the company being what people are trying to kind of posture it to be in terms of their stock. So that's the role that belief plays. It means that you're going to get in, and it means that you're going to resist certain stocks. Because if you don't have belief, then when it goes up, you're going to say, I don't know why it goes up. Should I sell it? And then when it goes down, you're going to say, I don't know why it's going down. Should I sell it? And you're going to end up selling lower than you bought it for. You're going to buy the highs because the momentum is telling you it's going up. And then it goes up, and then it starts dipping, and you freak out, and then you sell it. And that's the best way to lose money in investing. Best way. So believe in what you're doing. And then the last thing, it's really a question more than anything else. Are you investing more than you can lose? So when I started, I have like this little pool of allowance money or birthday money or Christmas money. I'll kind of like squirrel this stuff away. And so I would really focus on guarding that money and then choosing to invest in some stocks or whatever, even some crypto, over time, using that little pool of money so that I could learn what I believe in and what I don't believe in. Because what I found was I'm not researching Weight Watchers stock right now, unless I have money in it, which I don't currently. But that was a stock that I bought at one point. And so I'd put money in it, and I thought this is going to be a good thing. And then it forced me to begin researching it because I was curious how the company was doing. And so when you put a little bit of money in there, it raises the stakes a little bit. And so you begin, doing some due diligence. But the real catch here is you don't want to put in more money than you can lose. Now, I'm not saying you don't want to put in more money than you want to lose. Nobody wants to lose the money that they're putting in. However, if you're taking out a mortgage, or if you're, refinancing your house to pull out money to put it in on something that you believe in, I would just caution you. That's a very dangerous approach. Now, you may be correct, and you may end up making, a ton of money that you wouldn't have made had you not done that. I get it. But the risk to me is far greater than the reward, in the sense that you're putting the stability of life in jeopardy in a lot of ways, as opposed to just making a little bit less money. So just as you kind of think through those things, when it comes to how should you invest, what are the things that you should look at, what are the things that you should do, I would very much encourage you, do your due diligence. That's the first thing. Research what you're investing in. Understand it. So if you're interested in Bitcoin, understand it. Is it cap supply or is it not? Answer that question. I'll tell you, it is cap supply, but that's something that's intriguing to me. The fact that I know that there's a maximum number of Bitcoin, that helps me know some degree of how would you say it? It's a degree of like calibration against something. So what do I think the total market cap of Bitcoin will be? I can make that number, like I can decide that. I can figure something out that I feel comfortable with, and then I can divide it by this maximum supply. A different cryptocurrency where there's not a maximum supply, I don't really know how to create a valuation for it. That doesn't mean that you won't figure something out that you feel comfortable with or that you won't believe in it. That's great. This is not advice in terms of what you should or shouldn't do. This is merely advice on how you should think about the approach to investing. So do your due diligence, create belief in something, or acknowledge that you don't have belief, and that's your kind of opt-in, opt-out. But believe in what you're investing in. So you got to understand it through your due diligence, and you got to believe in it. And then last, don't overextend yourself. Don't put yourself in a position where if your due diligence and your belief were incorrect, you're in trouble. That's not what you want. Probably the best advice I got when I was investing early on, and it wasn't directed just to me, it was a tweet that somebody shared, but just because you have done the math and just because your fundamentals might be right, it doesn't mean that the market agrees with you. That's a really big thing to understand. All of this work is not a guarantee. It's just you putting in the due diligence and doing that kind of legwork to make sure that you are doing as good of a job as you can. And the hope is over the long haul, it will in fact be a good investment. So some of my investments that I've been in recently, or that I currently am in, when I first jumped into them, they skyrocketed up. Others are, I'm hoping we're going to get back to even. That's how it goes. Think long-term, do your due diligence, believe in something, and don't overextend yourself. Those would be my tips. If you're planning on getting involved in investing in some way, shape, or form, it's a great way to begin understanding what's out there and to do so in a pretty safe way. Good luck.